Hi, and welcome to another Plato August reporting season update. With us, we have Dr. Peter Gardner, Senior Portfolio Manager at Plato. Pete, thanks for joining us.
Thanks for having me, Carl.
Pleasure. Big reporting season day. Let's start off with BHP.
Yeah, so it was big results today, as you mentioned. BHP was the first one. It came out with a pretty solid result. Its profit was $13.7 billion, which was up 2% on last year and about 1% above market expectations. So it's trading pretty well in the market right now. It also delivered very solid cash flow, around $20 billion of cash flow. The dividend was a bit lower than last year, 13% lower, but that still equates to a gross dividend yield of 7.6% over the year. And that was because they've reduced their payout ratio pretty significantly from last year versus this year, 64% down to 54%. Now, they've got a lot of projects on, and that's one of the reasons why they're holding back on a bit of that cash flow. And their potash project is now over halfway complete, and that's scheduled to finish at the end of 2026. They're also targeting doubling their Australian copper production by the mid-2030s. And so they're really investing in some of those newer commodities such as copper, which they think will last kind of longer term rather than the kind of traditional coal assets that they did own but have now sold most of. Now, the other interesting things they pointed out was that in terms of global iron ore supply, they pointed out that 150 megatons of that supply has a cost range in the range of $90 to $100 per ton. Now, to give you a bit of context, BHP alone produces 260 megatons. So 150 megatons is pretty significant in terms of the global kind of iron ore supply. And because they're saying that's in the kind of $90 to $100 range, they think that iron ore prices should be pretty stable around these kind of levels and shouldn't fall too much from here, which is pretty positive for BHP investors going forward.
Yeah, for sure. Okay, that's a great summary of BHP. We had another one of the big energy players, Woodside, report today. Really interesting result there. Dividends down, but share price seemed to do okay. What's your take?
Yeah, so Woodside has been performing quite poorly in the market recently, and so that's one of the reasons why they're doing well today, because their results has kind of beaten expectations and beaten kind of lower expectations. So their profit was actually up on last year, up 11%. Which was 4% above expectations, but they did reduce their dividend down 17%, as you pointed out. But they did maintain their 80% payout ratio, which was now the positive things that came out, that a lot of people in the market had thought that given they've got a bunch of growth projects as well, that they would reduce their payout ratio, but they haven't, and they've maintained it at 80%, which equates to a 10% annual yield. So that's positive for their investors. Now, another kind of positive thing that came out was their Sangomar project, which is one of their African kind of productions, that reached full production in July, which was ahead of market expectations, and their other projects are on track. So they're also doing pretty well in terms of the growth area of the market too.
Yeah, for sure. Well, why don't we switch gears? We also had one of the big supermarkets reporting today. What was your take on Coles?
Yeah, so COL's delivered a good result. Profit was up 4.1% on last year, which was actually 5% above expectations, on sales up 5.7%. So they're responding well in the market today. Their final dividend was up 7%, which equates to a 5.1% annual gross yield. Not quite delivering the same as BHP or Woodside, but they are obviously a lot more stable. But their supermarket growth, one of the things that we kind of note was that the supermarket growth was much stronger than the liquor part of their business, which also kind of was highlighted by Endeavour's poor result that came out yesterday. So Australians are spending a bit less on alcohol in the current kind of cost of living crisis, but they're still spending at the supermarket, with supermarket sales growth up 3.7% in the first 8 weeks of FY25.
Pete, thanks so much for your insights, and thank you for joining us for the latest Plato August reporting season update.
Thanks, Carl. Thanks, everyone.